about to hear a revolution in talk radio, Liberty Talk Radio, where the critical thinking will defrag your mind of propaganda-ridden viruses induced by mass media news programming. No BS here, just the facts.
And now we present to you America's quintessential iconoclastic anomaly. Wow. In talk radio, your host, Joe Cristiano.
Welcome, everyone, to Liberty Talk Radio, America's libertarian voice, broadcasting from our beautiful new studio in Tulsa, Oklahoma, to around the world. I'm your host, Joe Cristiano, and this is your antidote to popular talk radio. This broadcast is being brought to you live on Thursday morning, today's March 5th? March 5th, I guess. March 5th, 2015. I never know what day it is. It's terrible. March 5th, 2015. It is now 8:01 a.m. Central Time in what was once known as the good old USA. During our live broadcast, we do invite you to call our number 646-652-4620 or toll free 888-773-4496. We encourage you to call. You're not going to be interrupting our guest or myself or whatever. If you have a question or comment, please do call 646-652-4620 or toll free 888-773-4496. Before we get started, I would also like to remind our listeners to subscribe to our reminder service by visiting our website and clicking on the subscribe icon. We sell your name to no one. It's just for us. It's just to remind you when our next broadcast is. It's very helpful. And, of course, you can unsubscribe at any time. This morning, I am super pleased to have with us, once again, Jim Mosquera. He's the author of the book Escaping Oz, Navigating the Crisis. This is an update to his 2011 publication. And he talks about how economic statistics appear to be strong, but we can be fooled. Fundamentally, we still have some very, very, very serious structural problems. And Jim and I basically are on the same page on so many areas, and his background is really basically similar to mine. Different areas of the country, different areas of the globe, but very, very similar backgrounds. For example, I came from a time in my family where productivity, savings, and investment in that order were the norm. And he talks about that in his book, and that's it. I feel like I'm going back home when I read his works. And today it's all about getting a false education, going in debt, and consuming. So we have a different paradigm, and obviously it can't work. So with that, we'd like to put Jim. Can we put Jim on the line now? Jim, thank you very much for being on our program once again. It's a pleasure to have you back.
Good morning, Joe. Thanks for having me on again.
Now, Jim, your book, Escaping Oz, would you please tell our audience why did you name it that way and that title, and tell us about how you're suggesting that our listeners navigate this crisis that we're in?
Well, Escaping Oz is a takeoff on the theme of the Wizard of Oz. And, when you talk about economics, when people hear things about the economy and the Federal Reserve and so forth. I mean, for most people, it probably doesn't register. And I mean, this, in many respects, it's a fairly esoteric topic. So I had to try to create, I guess, a vehicle to kind of get somebody interested, in the topic of economics and finances and so forth. So I tried to very, very lightly weave in the Wizard of Oz story into it. And because it's something that everybody should be familiar with it, especially in this country, right? You've seen The Wizard of Oz, or you've read the book and so forth. So when the ultimate goal here, Joe, was to try to take these topics and simplify them and create them in such a way that they become more understandable. Because I think when you hear a lot of the things on the evening news, frankly, I just don't think it registers with a lot of people. And the whole theme of the wizard is very, very important because we as U.S. citizens, as participants in the economy, we've placed a lot of what I'll call blind faith in the wizards. And when I say the wizards, I mean a collective of, central banks, that could be, the Federal Reserve in this country, European Central Bank in Europe. Government is obviously largely responsible. And so when we've placed so much faith in the wizard, if you remember the story of the Wizard of Oz, when Toto pulled back the curtain, before that time, the wizard was this very powerful being, right? You saw the fire and the smoke and, this big, loud, bellowing voice. But when Toto finally pulled back the curtain, you could see that the wizard was really just an ordinary man. And that's one of the themes that I try to convey in the book, is that the people that are orchestrating these things behind the scenes to try to massage and manage the economy, they're really ordinary people. They don't have any special particular magical powers. They're not circling, about the earth with some great magical, mystical ability. So, but because of that, we've placed so much faith in these institutions and organizations that's what we have to worry about navigating this crisis, because we're still in this crisis. They're trying to navigate us through the crisis, but I think at the end of the day, when everybody, and by the way, Toto is interesting, because Toto is a Latin word which means everyone. And if you think back to the story of the Wizard of Oz, Toto, everyone, pulls back the curtain and sees the wizard. So one of the goals of the book is to try to help people pull back that curtain so they can see the wizards and everything that's going on.
Jim, I'm gonna play devil's advocate for a second. If Toto today pulled back the curtain, do you think the people would recognize the wizard for the con artist that he is, or would they say, "Oh, geez, there's the wizard"? I mean, would they truly? My problem is that there's so much that is so plain to see, so logical and so condemning, and yet we tend to make excuses. So we pull back the curtain, we go, "Oh, there's the wizard, he can save us now," even if they see that it's not only an ordinary man, but an ordinary con artist.
Well, you know what? I probably won't use the same pejorative word and say that they're con artists. I mean, I'll give them, I'll take them at face value and say they're trying to make things right. I mean, and I believe that they're trying to do the right thing. The problem is that again, if you think back to the story of the Wizard of Oz, when Dorothy and all of the other characters, when they see the wizard, I mean, they're in awe, right? I mean, it's just they're completely inspired by these characters. And think about the times when Alan Greenspan used to go in front of congressional committees, right? And everybody was just waiting again for the wizard to make his pronouncement. Right? And I have a really interesting little section in the book that was I pulled it from a book called Maestro by Bob Woodward, if you remember him from Watergate fame. And he said that if you're familiar with Alan Greenspan, he's married to NBC News correspondent Andrea Mitchell. And apparently, when they were dating, he made his marriage proposal to her, and she had no idea that he was actually proposing. So think about this. For a second. So, here we have somebody that's in front of Congress, and everybody's trying to decipher what he's trying to say, and yet his own future wife couldn't even decipher the marriage proposal. Right?
That's fascinating.
This is what we have going on.
And Janet Yellen is really, she's also classical. They hang on every word when she uses the word patient. Or we will consider, interest rates, for example. We will be patient. We may consider being patient. And then they say, well, what does she mean by this? She put this word ahead of that word. And now last time she said it this way. Now we're playing with words and we listen. And I'm sure a majority of the population listens, and they hang on every word. And I listened to that, and I said, they're a bunch of lunatics. I mean, what difference does it make what she says? It's what's happening. And it seems that we mask everything what is going on with what is being said. And what is being said makes no sense. And maybe I'm just not smart enough to understand it, but...
Yeah, and there's always the illusion that the Fed is in control of everything, and that's some of the things that I try to dispel in the book. The Fed's not necessarily in control, and sometimes following central banks can be very hazardous to your health. I wrote an article here about a month or so ago on a publication called Seeking Alpha, where I talked about what happened with the Swiss National Bank I guess it was about 6 weeks ago, where all of a sudden they pulled their support from the euro. They had a peg for the Swiss franc to the euro. And of course, all of these institutional traders, probably private investors, were thinking, okay, well, this is a sure thing. I'm going to stay with this. And in fact, I believe, probably a couple of days before they actually pulled that peg, the Swiss National Bank came and said, yes, we still support the euro, et cetera, et cetera. Then all of a sudden they pulled the plug. Well, untold amount of wealth was probably lost by hedge funds and institutional investors when the Swiss National Bank decided to do that. So again, this is something that I try to emphasize in the book, is that, be very, very careful, again, about following the wizard, because, again, the wizard is not who you think they are. First of all, they don't have magical powers, and you might be placing your wealth and your financial portfolio at great risk if you continue to do that.
Well, vive la Swiss franc. That's all I have to say about that. Now, what concerns me is that I think you discussed this in your book, is that at one time, and I know you talk about your background, where your father instilled upon you the principle of hard work, savings, and the savings is used as investment for productive uses, such as the expansion of factories and investment technology and whatever. And therein lies the creation of wealth and jobs. We have it backwards today. Today we say, well, forget about that. We'll skip that segment, and now what we'll do is just have people spend as much money as possible to inflate the GDP, so we can tell everyone, again, like the curtain's still closed, tell everyone that the economy is doing fine. Not only is it good to be highly in debt, but let's continue to increase that debt so we can increase the GDP and everyone will be wealthy. Now, when I hear that, in effect hear that, I go for coffee. I take a break because nothing registers. But it seems that a good portion, if not a vast majority of people in the United States, actually buy into that. When did we go astray? When did we say, hey, you don't create money out of debt, give it out, put people in debt, and then have a strong economy? I've never heard that. My grandfather never told me that.
Wow, you have a lot of topics there that's probably going to take a little bit to answer. So let's go back to something.
This hour is yours, Jim. Take it. Go away with it. No, in fact, I'll leave. I'll go for coffee. I'll be back in about 15 minutes. No, go ahead. Go for it.
Yeah. So we have to go back to fundamentals. And one of the things I talk about in the book is what I call self-liquidating debt versus non-self-liquidating debt. And if you talk about Let's first talk about self-liquidating debt. So let's say I'm a small businessman and I want to start a business, or I want to expand my business, and I go take out a loan from somebody. That loan is going to be used for productive purposes because the proceeds of that loan is going to perhaps result in an increase in productivity, maybe expansion, et cetera. And the end goal, of course, of all that is I wouldn't be investing in my business unless I wanted to make money from the business. So the generation of that business is what's going to be used to help pay off the loan. Now, the other aspect of debt is called non-self-liquidating debt, which that means is it doesn't liquidate on its own. So let's use an example. Wow, I really want to take this, or I really want to buy this boat to go cruise up and down Lake of the Ozarks. I don't have enough money right now, but I do have some equity in my house. So I go take out a home equity loan or line of credit for $15,000, and poof, I have a boat, right? Buying that boat is doing nothing for me to help pay off the loan. So in order for me to pay off that loan, I need to then generate income either through my normal work channels or what have you. So unless I was going to use that boat to charge people to ferry them on the lake, which that wasn't my intention, it's for pleasure, that becomes a non-self-liquidating debt.
Right.
And we became much more, and I say we in the United States, and I'll use other parts of the world as well, we became much more accustomed to creating more and more of that non-self-liquidating debt. As a result of that, we have this debt overhang on a consumer level, which it has lessened here in the last few years since the economic crisis in 2008. But we still have that present. And again, debt is something that does not go away except for one of two methods. One, you pay it off. Two, there's some sort of default. And within default, there's restructuring and outright default, which the debt doesn't get paid back. Right. When those two things occur, it's very, very hard to consume new things, right? Because you're worried about paying off the debt. The other aspect of debt that I want your listeners and your viewers to understand is that this debt is what I'll call consumption brought forward. So in the case of that boat that I mentioned earlier, yeah, I could have that boat now by taking out equity out of my home if I have it. But the other aspect is, well, what if I don't have that money now? What would I do? Historically, I would save, right? And if it took me 10 years to save the $15,000 for the boat, then that's what I did. There's an anecdote in the book that I wrote about that when I was growing up, I had this neighbor who was from South Korea. And she told me that in her country that people wouldn't even take out home loans. And that they would just simply wait till they had enough money and saved, and they got that. Where I grew up in Panama, the rate of home ownership, actual home ownership, not renting, was actually very, very low. And in the time that I lived in Panama, and my dad was a doctor, so it wasn't that he was, we can certainly hear later in the show, was much more constrained. So you couldn't just go to the bank and say, hey, Mr. Banker, can I take out a 30-year note so I can buy this piece of property? That just didn't exist, So the availability of credit is something that, again, has been fostered by our monetary system.
Right.
It certainly was fostered by government, not just in this country, but even in the United Kingdom. Margaret Thatcher advocated years ago that she thought a great platform for her party was to encourage home ownership. So we know what happened, right? We encouraged a lot of people to buy homes that really didn't have any business buying homes. And then, of course, there was a cascade of events, Lehman Brothers, Bear Stearns, AIG, et cetera. So, and we know the rest of the story.
Yeah. Well, the similarities are almost eerie because my father was in business for himself the day that he came here from the old country. He came from Naples, Italy. And he says his biggest regret is when he borrowed $14 from his future mother-in-law because she never made him forget it. And that's the only time he borrowed money. And he wound up with a factory on First Avenue between 123rd and 124th Street and had 200 people sewing gloves. This is when women wore gloves, white gloves when they went out. And but he did mostly subcontract work for companies like Kaiser Roth, et cetera. My father, he did own the building that we lived in, but he didn't own a house. I mean, we were like renting in our own building, if you will. And of course, the other people rented out because he had the factory underneath. We lived above the factory,
Right.
and then, to the right was Morris's grocery store. We walked downstairs 3 feet, and we were in Morris's grocery store buying pickles out of the jar, out of the barrels. That was a wholly different lifestyle. When the city condemned the building, my father opened up a new factory on 126th Street. And we moved to the Bronx, but he rented. So my father rented, and he basically died almost not poor, but broke. I mean, he had just about enough money to get through life and basically pass away, unfortunately. So we were never wealthy, although it appeared that we were wealthy. We were never wealthy, and we always lived in an apartment, and well, there's no community expense. All we did was my father walked downstairs into the factory, walked back upstairs, and my mother did the bookkeeping in the kitchen. So, but people don't do things like that anymore. It is amazing. I have my son's friends who mostly are depressed, primarily because they can never see themselves getting ahead. They are hellaciously in debt. Everything that they really want is so expensive. They want to buy a new car, but they do. They buy a $55,000 Camaro or whatever, and they put it on credit. They may have a college debt, credit card debt. And when you add up their debt, we're talking over $100,000 for guys that could hardly make ends meet. This is a bizarro world to me because I'll be honest with you, I can go out. If I bought a car, I'll tell you which one. I'm going to buy a Lamborghini, But, I mean, what for? I say, well, what for? Someone gets stolen somewhere? And so I still ride around in a 1996 Subaru with 283,340 miles on it last time I checked. And people say, why don't you buy a new car? You can afford it. I go, what for? I can use that money productively. What really bothers me about what I just said is that those people who think that way, have some money saved up and invest them, are actually vilified by the government. They're the mean people. They're the selfish people who want nothing but money. But these are the people that are creating jobs and creating wealth in the nation. And the government has done a good job of saying, watch out, these guys are the financiers or the entrepreneurs, and you can't trust them. It's really the laborer who's the good guy. And it seems like we have this world, and not the labor is the bad guy, but they want to make the owner the bad guy, when the owner's the guy who sacrificed in order to create the jobs. We don't do that anymore. I mean, we just vilify everyone who is successful. What's your comments on that?
Yeah. Well, and it's interesting the dichotomy that you just drew there, because if you think about the target audience for what you just mentioned there, perhaps the subset of people creating jobs and then everyone else. Well, there's a lot of votes in that everyone else group, right? And so ostensibly, politicians want to curry favor with as many voters as possible, right? And so if you look at some of our economic policies over the course of, certainly the last couple of generations, and I talked about that earlier, encouraging home ownership, right? I think it was during the Clinton administration that there was a very direct approach to try to promote home ownership, right? And there was something that was very, very important that was done, which was the lifting of the Glass-Steagall Act. That was a Depression-era piece of legislation, and what that did is, we had separated the functions of commercial banking and investment banking. Well, now we brought them back together in single institutions,
right? And
of course, institutions were the ones that became, quote, too big to fail. And then what happened then? Then we had the government trying to support those institutions. I should say taxpayers. I say government. Taxpayers were going to support those institutions in their moment of greatest failure. But government actually, fostered some of that as well. So the fact that, I hear this from small business people all the time, because in my business now, which is business restructuring and helping small businesses acquire capital, I hear that it's very, very difficult to operate in today's environment as a small business person. So I've heard some people tell me that if they had to do it over today, if they had to start today, they might not start a small business. That's actually a very central theme of a chapter that I have in the book. It's chapter 18, and it says, "What should government be?" And it's a very important thing that I want people to really consider if they read the book, because as we've asked government to do more, they've become more authoritarian. And if you look at some of the great empires in the history of the world, like the Roman Empire, what probably happened as the Roman Empire grew, right? They became more authoritarian. There were more regulations. There were more rules. It's government's attempt to try to control more. And again, I know we can vilify government by saying, well, they're doing all these things, but you know what? We as voters have allowed that to happen. I mean, I think a lot of us need to look in the mirror and say, you know what, these things are going on. We hear, things like that from Joe Cristiano and others, but what are we doing about it? We're not really doing anything about it. And again, this is probably slightly off topic, but one of the things that I have thought, I didn't really talk about this in the book, is that this country, probably more than any point in time, and certainly the last couple of generations, needs a viable third party to run in right. General elections at the state and local level. And I say third party, maybe third parties, plural, right? Because right now, I don't draw a lot of distinction between Republican Party and the Democratic Party, particularly on issues of economics and financial topics, the stuff that I write about. Yeah. So you need another voice in there. And that's why in this book, I included a chapter called "What Should Government Be?" I had nothing about government per se in my last book, but I just came to the realization that it's something that people really need to ask themselves. Here's what the founding fathers said the purpose of government was. Now let's take a look at what government does today. Now there's a big chasm between one and the other, right? So my question is, as a people, we need to really reconcile what is it that we want government to do. And then when we prioritize what's really important, and when I say government, primarily the federal government, but you can extend that to the state government as well. Once you decide what those things are that are important, then decide whether you're willing to pay for it. And when I say whether I mean everybody, and I don't mean just the upper 1% that should have all the burden placed on them. I mean, this is a collective thing, right? So if you want government to do all of these things, then you have to be willing to pay for it. And as a collective nation, you have to be willing to bear that burden as well.
Yeah. Well, it seems that at least over time, and I don't know if this was intentional or it's just a trend toward more reliance on government, and the expectation that the government will always be there as a safeguard, so we need government. We need government to ensure that about everything we do in life today. Look at the Jersey Shore gets washed away during a bad storm. Well, people place houses right on the beach, and you go, guess what's going to happen? Someday there's going to be a storm, and your house is going to be gone. But yet the government has to come in, intercede, and guarantee these people insurance so they can rebuild their houses right on the water again. And basically, we're paying for that. But we've become to expect that instead of saying, hey, wait, that's not the job of government. Look at the Constitution. You're taking money from me and giving to someone who has this beautiful house on the shore that's guaranteed never to lose their house because I'm always going to pay for it. And of course, we compound this millions and millions of times over, and we wind up with a debt of $18.2 trillion, whatever it is today, and getting worse. Doesn't anyone see that this can't work, that long-term capital management went under, 1998. We had the dot-com bubble in 99. We had a mini recession in 2002. We had the housing bubble in 2008. And now we have a automotive loan bubble plus hellacious debt. You don't have to be a rocket scientist. You don't have to be an economist to say that we are going in the wrong direction and people are just asking for more. I don't see us ever getting out of this short of some sort of major correction, and that correction would have to include the elimination of many of the programs we have today. Right or wrong, or what do you think?
Yeah, so you hit on an interesting topic there, and this is what I'll call, I'll just term it up, I'll just come up with a term right now, I'll call it life risk. Living life is not risk-free, and I think that people have grown accustomed to government, and again, I say government at all levels, not just federal, providing more and more of that risk protection in life, okay? And when you do that, again, those things cost money. And it also costs us, I think, some degree of liberty because we're asking the government to become more and more involved in different facets of our life.
Right.
There's a very interesting piece of legislation that I believe it just got implemented last year, which is the Foreign Account Compliance and Tax Act. And the United States now is requiring foreign banks to register with them and report with them if they have U.S. nationals opening accounts within their boundaries. And the first country that it got hit, and it was in the news a lot about this, was, of course, Switzerland, because Switzerland had banking privacy laws, banking secrecy laws. I don't think what a lot of people realize is that one of the reasons that Switzerland had some of that banking secrecy established, I think it's a historic thing for them, but it really got promulgated even more prior to World War II, when a lot of the Jewish community in Europe wanted a place to stash their money because they saw what was happening with Nazi Germany. Switzerland became a safe haven for them.
Right.
So now, the United States, and again, we talked earlier about authority. This is authority within, not just within the boundaries of our 50 states. Now we're going overseas and we're telling countries, hey, if you want to play in the US dollar and be part of the international banking system, you have to do this. And now there's actually another piece of legislation that is called GATCA, which is kind of the same thing, but only on a more international basis, which now other countries are going to ask the United States to do the same thing. Well, the United States is kind of balking at that a little bit because the United States always, wants to be the big dog in the neighborhood. Right. So again, the theme is that if you ask for more, you're going to get more, and that more is going to mean more money that has to be spent, but then also more authority that has to be exerted in order for government to control more, to provide that security for each individual.
Yeah. Now, I think were you referring to the Foreign Account Tax Compliance Act, FATCA?
Yes.
Yeah.
Yes.
And I was surprised that there was not more of a backlash on that, because I haven't heard a thing about it ever since its initiation in July 1st, I think, of 2014. And some people expected a tremendous backlash and a ripple in the dollar as the world's reserve currency because of that, and nothing happened. Do you have any idea why we didn't hear more of a backlash, or is it hidden?
Yeah. Well, I mean, backlash, so let's probably figure that there's a very, very small percentage of, about this in the book, there's a very small percentage of Americans.
Right.
So again, it's not going to be a very popular topic, but there are some people right now, let's say, that are Americans, and this isn't FATCA per se, but this is, again, the extended reach of the U.S. government, that have been living in Canada for a long time, and then all of a sudden they get something from the IRS that tells them, hey, you owe taxes in the United States. You've been living in Canada all these years, and your money. But the United States, and I believe there's one or two other countries in the world that extend their tax jurisdiction all over. And as far as the issue with the U.S. dollar, I actually talk about the U.S. dollar in the book, and I actually, my forecast for the U.S. dollar, and I really, this is going back several years, but it really manifested in 2014, is that I view the U.S. dollar on an uptrend, not necessarily super long term, but what's happened in the last year with the U.S. dollar does not surprise me at all.
Okay. With that, we're going to stop for a break, and when we come back, we're going to talk about how people protecting themselves and what they should be doing and how they can navigate this crisis. So stay with us. And folks, I want to give us our number again because we haven't had any callers yet, which is surprising. And you're not interrupting us. Please call 646-652-4620 or toll free 888-773-4496. Don't go away. We'll be back in a minute.
You're listening to Liberty Talk Radio. Political talk derived from a historical perspective. Not always palatable, but good food for thought. Pure libertarian talk with host Joe Cristiano. LibertyTalkRadio.com.
Express Test is your go-to company for on-site occupational health testing services. That's right, we said on-site. That means we will meet you at your facility for a free health and occupational safety consultation. Express Test specializes in hearing conservation, respiratory protection, and employee safety. We can help you establish viable programs tailored to your business and employee needs. For your free consultation, call 918-743-2929 or visit us at expresstest.com. That's 918-743-2929 or expresstest.com. Do you find yourself asking, what did you say? Aaron Cristiano of Ranch Acres Audiology has over 25 years of experience helping patients just like you.
Hearing requires conservation. We need to be aware and we need to be responsible for our own hearing health.
Understand more with a little help from Ranch Acres Audiology. Call 918-749-7711. That's 918-749-7711 to learn more. We'd like to thank attorney Constance Squires for her support of Liberty Talk Radio. If you want a comprehensive way to affordably avoid legal issues, call Constance Squires. For a free consultation, call 918-254-9283 or go online at isthyWillDone.com.
This isn't your typical talk radio show. This is Liberty Talk Radio.
Welcome back, everybody. This is Joe Cristiano. You're listening to Liberty Talk Radio. As our guest, we have Jim Mosquera, the author of the book, Escaping Oz, Navigating the Crisis. It's a republication, an update of his book that was originally published in 2011. And it speaks in plain English as to where we were, where we are, and how we can navigate where we are going. Jim, are you still there? Oh, there you are.
Yes.
You disappeared for a minute. Yeah. Okay. I thought you left me altogether. Now, Jim, you mentioned that you're sort of bullish on the U.S. dollar. Let me see if I have a difficult time understanding that, considering the debt that we're in, the unfunded debt of somewhere 150 to 250 trillion dollars, depending on which numbers you use. I think it's the Professor Kutlikoff of the University of Boston. When I had him on, it was like, this is a couple of years ago, $223 trillion if you include everything. I don't see the debt getting any better. Where zero interest rates, we ain't saving a dime because you lose money. I mean, you basically are paying the banks to hold your money. If I was going to do that, I would just put it in paper currency, bring it home and bury it in the backyard. I'd save money, and I'd always have it on me in case of a bank crash. But I can see this going on for maybe the next couple of years, but You sound like you're more bullish on the dollar than I am.
I don't know that I necessarily am, but so let's, again, as we talked about in the first part of the show, let's go back to fundamentals. Okay, so what is a U.S. dollar? All right, and one of the things that I emphasize in the book, and I try to be very consistent in all of my writing that I do that people read, is that the U.S. dollar is what's known as a fiat currency.
Right.
Okay. So what is a fiat currency? Well, fiat currency is something that is assigned a value, right? And we accept the value of that piece of currency. Right. Okay. So let's understand that. So if we have that as our fundamental, then let's take a look at any other currency in existence in the world today, right? And to my knowledge, and again, if there's a listener out there that knows otherwise, please call in. I don't believe that there are any currencies that actively circulate in the world that are not fiat currencies. So in other words, all correct. Currencies are fiat currency. Okay. Correct. So if we take that as our fundamental, then when people decry the dollar, one of my comments is, tell me what currency out there is better fundamentally, okay, and that there is none. Okay. Now, correct. If somebody says that there's going to be a currency created and it's going to have these characteristics of money, as I define in the book, which is an actual store of wealth, a unit of account, then that's a different story. But that hasn't happened yet. Now, let's take a look at another fundamental. The history of fiat currencies is not a good one. Fiat currencies, historically, they go into oblivion, and there's a reason for that. And part of the reason for that is because fiat currencies can be manipulated far easier. Right. And chapter 1 of my book is what I call the origin of our problems. And the origin of our problems is what we define as money today. And our definition of money has changed very, very dramatically over the course of the last 100+ years. Action number 1 occurred in the 1930s with a declaration that U.S. citizens couldn't hold private ownership of gold except for small amounts for jewelry and so forth. But then the big whammy was in 1971, and what I tell people is that the thing that people should remember Richard Nixon about the most is not Watergate, is what happened in August of 1971 when he basically closed the gold window, right? And so and so this is a very, very important point.
Well, he closed it temporarily. He said it's only going to be temporary to protect the dollar against the speculators, I want you to know. I'm a speculator. I'm still here. I just.
but we know what temporary means.
Yeah, I know. Yeah. Till the day you die. That's speculation. Exactly. That's temporary. Yeah.
Exactly. So, but this is a very, very important point to understand. After World War II, there was an agreement called Bretton Woods, and I believe it's eponymously named for the town in New Hampshire, where the victorious powers got together and they said, you know what, we need a new international currency standard, and what we're going to do is we're going to ratio everything to the U.S. dollars. So a U.S. dollar is worth 5 Italian lira, 3 German mark, X number of British pounds, et cetera, et cetera. So there was that structure established. Oh, and by the way, if you have a claim on a U.S. dollar, that is equivalent to having a claim on gold.
Correct. Right.
And so if you think about this for a second, and I know sometimes, and I'm not a gold bug in the classical sense, but let's understand something very, very clearly here. Here we have, at least in the 20th century, ostensibly, arguably in the history of the world, the most important international monetary agreement ever. And what did it say? It said that this base currency, right, the U.S. dollar, had to be tied to what? A precious metal.
Correct.
Right? A relatively scarce commodity. So why was it so important to do that? I mean, and I'm just asking that question. I mean, I'm asking that rhetorically, not to you, because you know the answer to that, but to your listeners, think about that for a second. Why was it so important to have the U.S. dollar tied to gold? Well, there's a reason for that, and I talk about that. The historical importance of, whether it's gold or something else. The issue is that you have a tie to something that's scarce that can't be manipulated as easily.
Right.
So what Nixon did in 1971 is, because of what we were doing in the 1960s with an expansion of government, again, we're asking government to do more, foreigners understood that there was something going on with the U.S. dollar, so they felt more comfortable holding the thing that the U.S. dollar to them represented, which was gold, as opposed to the dollar itself.
Right.
So thus began the run on the gold window. Nixon, and I'm sure he had advice from his Secretary of Treasury at the time, probably told him, hey, you know what, you probably need to shut this thing down because we're going to be drained here very quickly. Since that time, what has happened? Currencies have been free to, quote, float against one another. If you look at the Forex market, so the foreign exchange market, that dwarfs all other markets, right. Stock exchanges, bond exchanges, et cetera. So it's a very, very large market. There's a lot of speculation that goes on in that. One of my training in the past in terms of understanding markets was trading commodities. So I look at a lot of the technical things that I see on charts. And when I tell you that I'm bullish on the dollar right now, it's because of the technical things that I see on the chart. Now, does that mean that it's necessarily rational? No. And that's something that's very important to understand as well. I mean, I have a chapter in the book. It's called Investor Psychology, very, very important. So people understand how investors make decisions. So to your point, yeah, you have something right now that says, okay, the United States has a funded debt of $18+ trillion. The unfunded liabilities is a number with all zeros after, right? There's a lot of derivatives trades that there's the notional value of a lot of those in the trillions also. So anyway, so my point is that from a rational perspective, you look at, well, wait a second, should the dollar really be valued at this? I'll even throw something else out there right now. The interest rates that you see presently, not only on high yield debt, but certainly government debt. Let's go back to psychology for a second. There's a in the world that's very indebted, the rising sun, Japan, which has more liabilities the United States does on a percentage basis, right?
Right. The debt to GDP is like 200% or something, isn't it?
Yeah, it's like 250%,
yeah,
right? So, and yet their government debt is close to nothing right now, even if you go out as far as 10 years.
Right.
Again, back to psychology, that makes absolutely no sense. Okay, but I can look at a chart, within the course of the last 2-3 years, and I can what's going on with Japanese debt. Here's what's going on with U.S. debt. I'm not going to fight the commodity trader. The trend was my friend, right? So I'm not going to fight it. I'm not going to fight a trend. Now, does that all make sense? No, it makes absolutely no sense. Argued very vociferously about is that right now, granted, the wizards have been very active in markets, and that's part of the reason you have some of the low rates that you have right now. But I said, even aside from that, it's very, very hard for me, just logically and fundamentally, to think, okay, I'm going to loan the Japanese government money for 10 years, and I'm going to get 0.1% or whatever that minuscule figure is. It just doesn't make any sense.
Yeah. Well,
but I'm not going to fight the trend either.
But every trend, that downturn or the ceasing of every trend usually is very abrupt. People least expect, and they say, geez, how did that happen? I mean, because if we knew it was going to change, if we knew we were going to go on a down or the trend to alter significantly, we would all be prepared for it. We'd all do the necessary things to protect ourselves. That doesn't happen that way. We all panic. We all lose a tremendous amount of money. Flees the market or whatever the case may be. So how do you see all this playing out when you consider that we all know instinctively that you cannot have zero interest rates in perpetuity? You cannot ask people to continue to go into debt and not invest into plants, equipment, technology, etc. You cannot have continuing high levels of exchange debt and trade. I mean, go on and on and on. Could never be paid off and getting worse. Isn't there a come to Jesus meeting, so to speak? You use a term that's very common. And when that happens, then everything gets corrected. It's hurt, and no one expects.
Yeah. So this gets back to the investor psychology. Recently we had the death of Leonard Nimoy, Mr. Spock, from the Star Trek series. And if you remember, for those fans of the Star Trek series, Mr. Spock was a Vulcan, and Vulcans were very people.
Right.
And I actually I actually have a picture of Leonard Nimoy as Mr. Spock in the book. Heath says, you think about investments like he does, because most people are not. And there's a lot of psychological studies by this. And part of the problem with financial assets versus what I'll call consumer, financial economy versus consumer economy is this. And I actually have this example in the book. Don't necessarily have a sense that they have better information than somebody else. So I'll give you a really basic example. So let's say you walk out the door in the morning getting ready to go to work, and you look outside and the sky looks pretty clear, but you see everybody else that they have their umbrellas up. It looks like it's going to. They don't know, and that they do, because they're a mass, and there's something called herd following that back to the limbic system in the brain, which is that fight or flight response that we're all wired with. Okay. The difference is that Mr. Spock would use that cerebral front cortex to analyze, and he would look up and say, well, all these people are dumb. It's not going to rain today. This is just going to be a burden for me to carry around my umbrella. Everybody else says, no, we're going to do this. Now, let me flip that around for a second. So I like to drink in the summertime when it's hot here in St. Louis. There's something called Sam Adams Summer Ale. Very cool, refreshing, has a nice little lemony finish to it. Just a great summer beer. Now, typically, I can find that beer for probably $5.99, $6.99 at my grocery store for a 6-pack. So if I see that price, I'd say, okay, I'm gonna buy a 6-pack of this, and I'm gonna enjoy it later. Now, if the price of that were instead $25 or $50 a 6-pack, I would look at it and probably turn around and walk the other way or look for something else. But that's not what happens with financial assets. With financial assets, when the prices seem to be going higher and higher, people tend to what? They tend to think they tend to buy more. And the thing that has facilitated a lot of that and tends to create bubbles, and right now we're in probably the historic bubble of all time from a credit perspective, is what? It's credit. It's if I have the ability to have credit available for investment purposes or for speculation, et cetera, because our currency can be very, very easily manipulated to create more and more credit. Right. It tends to magnify and exacerbate the effect of what I was talking about. So if Sam Adams were $50 a 6 for that summer ale, I don't think that you would see people going to the bank borrowing money to buy that 6-pack of Sam Adams, no matter how much they like it. Right. But on the other hand, if the real estate that they had in their neighborhood kept going up, and then they wanted to move and they wanted to go somewhere else, and on a per square foot, then maybe logically or rationally you think it should, well, you might say, gosh, that seems like awfully expensive piece of real estate. But in times past, I had a very willing lender willing to lend me the credit to do that. And so then it becomes kind of this self-reinforcing loop where the higher price the financial asset is, the more people tend to chase it, right? And then it keeps going on. And that what creates bubbles and manias. And I have a chapter in the book that I actually describe a bubble and a mania in the 3 different aspects of it. And one thing that's very, very difficult for people to understand is when they're in a bubble, when they're in a mania. It's really hard for people to see that when they're in it. Now, you asked earlier, at what point does that change? Well, the point that it changes, and I'll just use a real simple example in the stock market. So let's pick a very popular stock right now. Let's use Tesla as an example. So Tesla is valued, let's say I don't know what the price is. Let's say it's $300 a share.
Oh, yeah, it's way up there. Yeah.
At a point where the 2 parties agree that the price of Tesla is not that's when it changes. And if you have enough people starting to do that, then you create a cascade of events that pushes something lower. Right. Now, however, in the worst case scenario, you have a situation that's called a panic, where you have a lot of people then storming for the exit, and they want out. So when it happens gradually, you'll see a very kind of a gradual trend change. But in this country, we had the panic of 1987, which was a panic. It occurred, a concentrated move in one day. A lot of selling, very little buying, and you'll see more of that. And again, I suspect, like in the debt markets, you're going to see some failure of some bond issue, and I don't know where it's going to be. Perhaps it might even be in the high yield area. And maybe that bond issue doesn't get bailed out, and then people start to lose that confidence. So, I have some economic laws that I just developed on my own in the book. And economic law number 1 is called credit equals confidence. You can't have credit until you have confidence, and vice versa. So at the point that people lose confidence in something, whether that's in the equity markets or the bond market, that's when you'll start to see the cascade occur. The problem that you have now, Joe, and I actually use the metaphor of a blimp, those dirigibles that go around sporting events. That's kind of if you think about the Great Depression being a credit inflation the size of a beach ball, what I see now is the size of one of those big blimps that circulate.
Yeah, okay. I can envision that.
Saying,
yeah, I can buy that.
So the metaphor is that if you believe in my type of economics and finance, when you inflate something to that degree, that's the amount of air that needs to come out eventually.
Right.
So there's a lot more air that needs to come out this time than it did during the 1929 and then subsequent Great Depression. And that's the greatest danger, is the effect of all that air coming out.
But not only that, would not it be even exponentially greater than it was in 2008? We don't even have to go back to the Great Depression of the 1929.
I'm glad you brought that up, because in 2008, you had the market have a recognition that, okay, it was time to reset, to readjust. Right. And that's what markets do.
Right.
But instead we had, and that's one of the things that prompted me to write the first book, we had the wizards step in and say, nope, we're going to try to fix this.
Right.
And here's how we're going to try to do it. So government, steps in with stimulus packages.
No smoke and mirrors, right.
I even referenced cash. You had the central bankers do some different things. However, if you look at what the public did especially with the revolving credit, like credit cards, it tapered off and it actually started to go down. So the public had a recognition that, what, something's wrong here. Yeah. So we're going to start tapering. Okay.
Right.
Now, since that time, you look at credit card debt and it stayed relatively flat. So the public has a recognition, but what's gone, awry or haywire with consumer credit is what? Student loans.
Right.
Has just, they're over $1 trillion. And you mentioned auto loans, which are
auto
kind
loans
of
now is a new bubble, right?
Exactly. So, but from the perspective of, I'll say mortgage credit is about $1 trillion lower now than it was at its peak. There's been that recognition by some part of the public, and the public, as part of the market tends to understand what it needs to do on its own, because that's what makes it the market. But again, you've had intervention by the wizards saying, no, we're going to try to fix this, and here's how we're going to do it, right? And now, you have in Europe, you have the ECB saying, okay, we're going to do our own round of QE. You've had the Japanese doing the same thing. And I think in the end, and this is what, again, part of the pulling back the curtain, people have placed so much faith in the wizards in resolving these problems, that when they don't get resolved, there's going to be that tremendous loss of confidence, and you will not see that same adulation for the wizards that you saw in the past.
Yeah, but most people that I speak with, and I'm talking about intelligent people, not people who have no education or don't know what's going on or totally unaware, they are still in that mode. Well, the markets go up, markets go down, but if you stay with it, we'll be better off in the long run. And that may be true if you can outlive it. But if there is a severe downturn, many people are going to get hurt, and not that many people can afford to get hurt today as they did many years ago. We're, as a nation, more in debt than we ever have been. Student loan debt is up, credit card debt is up, mortgage debt is up, car loan debt is up, and we're not wealthier. We're losing the middle class. People are not having children. The demographics are all against us. I go by demographics primarily. Few people are getting married. Few people who do get married are having children. They just can't afford it. I mean, what gal wants to marry a guy who's living in his mother's basement, who has $100,000 in car, student, and credit card debt? He doesn't seem to be an outstanding candidate for marriage at this point, especially when the gal that he's dating may be in the same position that he's in. So, but these are the people that should be productive and supporting the likes of old people like me who are now, on Social Security. They need to be putting money into the system to keep the government solvent, so I can continue to collect my money and have a great time, which I still work 3 jobs. I still have 2 companies, 3 companies actually, but I'll never retire. But these people are becoming the minority. The middle class is becoming the minority. So to you, I ask, how does the average Joe Blow, who's relatively unaware but a believer in the system, how does that person navigate the crisis if we can break them from their belief system that everything will be okay because the government will take care of it? The government knows what they're doing. I'll just play the ball game.
Well, and I'm glad you mentioned that, because the last chapter of my book is called Planning for the Future, and it really involves what people need to do individually, collectively. I actually advocate more of a focus on what I'll call community-based governance, if you will,
right.
Because in the future, let's say that government that you once did, because maybe they're going to be strapped for cash, and they're not going to have that same ability, and maybe even more dangerous on a state level. There are so many people, and I have a discussion about a public retirement system. The public retirement system in this country, and particularly in the state that you live in, is an absolute shambles.
Right.
Exactly. And if you think about in the last, let's call it 6 years, because the last market bottom was in March of 2009. You've had a very effervescent stock market, bond market, and so forth, and that's typically where retirement plans invest their money.
Right.
And yet they are still underfunded. Depending on, if you look at one study, it's $3 trillion. Another one, by the state's own admission, it's $1.5 trillion, whatever it is. I said, take the average of that, you still have a very, very large number. And yet there's a lot of people that are more dependent on that. There's also people now in what I'll call the 99%, because I talk about wealth inequality and some of the reasons that that's occurred. Of that lower 90% of the population, more people now's wealth is tied to pensions as a percentage of their wealth, even compared to home ownership, right. Let's say business ownership, and so forth. So those people are even more dependent on the wizards to help them through their retirement age, right? So I actually, in chapter 19 of the book, which is Planning for the Future, you have to become much more self-sufficient, and that's individually on a community level.
Right.
If you're talking about from an investment perspective, I actually have a very bearish case for stocks. There's a lot of people that are very involved with that. You mentioned earlier demographics. I talk about demographics, and that demographics is not really favorable for a lot of residential real estate right now,
right.
For sure. So anyway, there's a number of other factors that are there that if you are involved with what I'll call a financial asset that has had the benefit of a lot of this credit inflation, that the start of that credit inflation for me, I mark 1982, 1981 as the start of this great credit bull market. Those are the assets that are going to be most adversely affected by the coming deflation, which we didn't really talk about deflation in this conversation today, but that's the consequence of a lot of this credit inflation, is the subsequent deflation that
right.
occurs. So you really need to be very, very careful about where you have your money today, and be very, what I would say, more defensive. Now, there are some in the audience that are maybe more aggressive and do more what I'll call trading. I think there's going to be some great opportunities for trading right now when some of these markets start to change.
Right. Well, I've always I've never had any debt at all. I have no debt on my house. I have old cars that are all paid for, everything paid for. And even my sons say, why don't you buy this? And I don't want to spend the money. I'd rather become more self-sufficient than just have more things to have to worry about. Jim, we're about out of time. This has been this hour flew by. I want to thank you so much for being our guest today. And if you can, do a little bit of promotion for yourself now. I'll give you 30 seconds or so, and tell everyone who you are, where they can buy your book, and whatever else you want to tell them.
Well, you talk a lot about debt in this show. One of the reconciliations of all of this debt problem is going to be debt restructuring, and I talk about that in the last chapter in the book. We cannot solve these problems. We're not going to grow our way out of this debt, so right. A lot of this debt's going to have to be restructured, and that's going to be a painful process, but I think it's going to be a necessary process. So my business, again, coincidentally, is in business debt restructuring. A lot of small businesses have problems with debt, and so my goal as a company is to help them restructure that debt through debt mediation and capital acquisition, because the banking system changed dramatically. So I try to help them with that. So that's my business called Sentinel Consulting. That's at sentinelconsulting.biz. The book can be found at escapingoz.com.
Okay, Jim, I hope you will accept our invitation to return at a later date.
Yes, it was very enjoyable. Thank you.
I surely was. This is a great program, Jim, and I look forward to speaking with you again. Thank you so much for being our guest.
All right, thanks, Joe. Have a good day.
Bye-bye now. Boy, that was terrific. I've had him as a guest before, and he just does a great job, and I hope we all learn something by that. He's a realist. Anyway, this is the end of today's broadcast. We'd like to thank our sponsors for the financial support, and we'd like to thank you for listening in. You can further the cause of liberty by recommending this program to your friends, but let us hear from you. Our email address is comments@libertytalkradio.com. If you'd like to be a guest on our program, also write to the same address, comments@libertytalkradio.com, and give us an indication of what you would like to talk about. Remember, folks, you're either allowing your liberties to be taken away or you're striving to protect them. One takes a lot of effort. My wife says that all the time. You're either allowing your liberties to be taken away or you're striving to protect them. She's absolutely right. Unfortunately, there is no middle ground. Until next time, this is Joe Cristiano. You've been listening to Liberty Talk Radio. Stay well. Stay tuned.